Joining us now are JoAnne Feeney from Advisors Capital Management and Darrell Cronk from Wells Fargo Investment Institute. Good afternoon, guys. JoAnne, NVIDIA had one of the best quarters we've seen in a long time and finished the day barely up at all. I mean, like, basically flat. AMD at the same time was down significantly today. I know that's a stock you're watching. Do you buy anything here, or do you just sit on your hands until we get all the way through Jackson Hole?
Well, you know, John, clearly today was investors pre-positioning for the Jackson Hole meeting. You know, getting a little bit of risk off the table. Obviously, NVIDIA's results were stellar, reaffirming the importance of AI to the demand for their high-end accelerator chips. And AMD is thrown into that same bucket because they're about to come out, according to the latest news, with their own accelerator chips designed for the AI world. So investors might be, you know, getting a little bit of risk off the table here in advance of Jackson Hole, but that's no reason to change your overall strategy and what you own in your portfolios.
Okay,
yeah, I wouldn't be changing anything here.
I do want to mention Intuit results are out. We are going through them. As we go through that, Darrell, your position, I think, is that stocks are probably going to fall even from here. So do you think investors should sell some, park in fixed income where you make a little yield and wait for bargains, or what?
Yeah, we are now underweight equities and have been. We think, John, you know, we've broken through the 20-day and the 50-day on some of the major indices. We've lost the Magnificent Seven from a technical standpoint. So it makes a lot of sense to play a little more defense here. We think the risk reward starts to flip more positive to equity somewhere around 41, 4,200 on the S&P. We're obviously not there yet. But there's big blue sky between the upper bound of the 50-day moving average and the lower bound of the 200-day moving average, which is down closer to 4,100. You know, on some of the tech side, we actually downgraded it in our mid-year outlook in June. We just felt like it was overvalued. I mean, look at NVIDIA today. You're still north of 40 times sales, no matter how good the numbers are, and about 22 times sales next year. Not PE, not earnings, but sales, right? So the valuations are just so stretched there. It's not mitigating the opportunity. The opportunity is strong, but at some point, valuation does matter there.
Well, JoAnne, we're a lot farther, we're really far from 4,200 on the S&P. We're closer to 4,400. So how should investors think about, I mean, by historical standards, maybe the indices overall are a little richly valued, but then you've got some companies, some stocks whose growth seems to justify it.
Yeah, John, so as you know, we invest in individual stocks and bonds for our clients. So that allows us to be selective, right? We don't want to own the whole market. And so to the question about what the market's going to do between now and the end of the year, it's not as relevant a question for us and our strategy. And what we want to do in this situation is, in recognition that the market as a whole is expensive, and, you know, one might argue that NVIDIA is expensive, but you have to build into the growth outlooks for these companies. And there are some bargains still out there. And so our view at this point is sort of take a little bit of a barbell approach, own the companies that you know are going to be foundational to the growth of the U.S. economy, to the transformation of technology and productivity, like in the world of AI, in the world of automation, for example. But also own some defensive positions, because we do know the consumer is vulnerable here. We're seeing mixed results in the retail sales, consumers shifting down to less discretionary items. And so you can own a TJ Maxx, for example. And that's a way of having some defensive positions in a client's portfolio alongside some of those key growth drivers, which will power their portfolio higher over the longer term.